Hey, welcome to the Closing Beat, everybody. Happy Thursday. Welcome. This is our stock market update show where we just kind of quickly go over the stock market, let you know the good, the bad, and the ugly. We're financial advisors here at Jazz Wealth. We specialize in helping customers with all the help and tips and things that the big financial advisors give to the high net worth customers. But we give it to everybody. We share that with everybody anyways. If you're one of our customers tonight, you should have the email already, an invite to our Wine and Wealth class tonight. We're going to focus on the basics of overpriced versus overvalued, kind of teach you how to identify stocks, sectors, markets that can be either overpriced or overvalued. So we'll be sure to cover that for you. Quick shout out to Mr. Matt. I posted this on Instagram. Matt took our logo, printed it out. I don't know if you can see it in there. Printed them out in all kinds of different sizes and colors and things. This one's my favorite here, the little white and red one there. So big thanks to Matt. That's pretty cool, man. And he sent me a breakdown because he knows the regulators will be watching to make sure something wasn't overvalued that he sent me there. So I think that was really cool. I appreciate it, Matt. Hey, before we get started, May 30th, Thursday, May 30th, if you know Heritage Wealth Planning, Josh Scanlon over there on the Heritage Wealth Planning channel, he's coming here to see me. Like, I'm freaking honored, man. If you don't know, the guy's a great financial planner, mind like 1,000 times, smarter than me. And he's going to come in the studio. We're going to do the normal 1 o'clock show. We're going to do it live, and then he's going to join me here for the 5 o'clock show. We'll get his take of the markets for that day as well. But at that 1 o'clock show, Thursday, May 30th, we're going to take questions and see if we can't help you guys out. All right, that's all I have for you there. Let's get started. So the markets, you got a gain on the Dow of about 214 points. Did pull back a little bit again. S&P 25 points, Nasdaq 75. The Nasdaq continues to be the best performer out of the groups this week, which we know that, right? I gave you the stats. One of the things that the high net worth clients get of these financial advisors is they get all the detailed stats. Well, I just basically say, I'm going to take all that stuff. I'm going to share it with you guys here. Some of it here, most of it with our customers. Remember, I said this week is historically the hardest week for the stock market. It's the roughest, most volatile, weakest week of the week for the S&P 500. However, that being said, the Nasdaq QQQ is the better performer historically. Tech stocks tend to be the better performer. Gains of about 1%. They're working on it, right? 1 day left to go. We'll see what happens. So you guys know that is the case. Now, they're just stats, by the way. VNQ actually happens to be the weakest, and so far that one's doing pretty good. We'll cover that in a second. But here you go. You got the S&P 500 trying to erase all of Monday's losses, all of the week's losses, and turn positive. It briefly did today, but finished just a little bit shy of that. I think if I could use one word for tomorrow's action in the market, I would say vulnerable. I would say the markets are vulnerable here. This is not a clear cut and dry. People want to buy. They're diving in. They got to get in this market. This is a reluctant, okay, if I have to buy a little, I'll buy some. I think that makes the markets vulnerable going into tomorrow if there isn't some sort of solid news, right? Think about it. Why was the market higher today? Any idea? A couple stocks? One sector? Okay. Why was the market higher yesterday? Couple stocks, one sector. Was it really any news? Did we solve the world's problems or anything? No, not really anything there. So a lot of the same today. For the Nasdaq, I'd say the same sort of thing there. We've had a nice little rally off lows. We did at one point erase all of the week's losses and go positive, but unable to hang on to that. I think that leaves the markets vulnerable going into tomorrow. Also, the Russell just can't seem to. Looks like we're coming back. Sorry about that. It seems as though the internet may have cut out there. It should be coming back any second. I will hold off a second just to be sure. There it is. It's come back. Okay, perfect. Let's get started. So vulnerable. That's the key words that I'm using here, is that the markets feel very vulnerable going into the end of the week. Now, for the S&P 500, 2,800 continues to be the big support area, or 280, however you want to look at it on the S&P or the SPY. That's holding for now, and I think it'd be totally okay if the markets finish somewhere between today's high and 280 tomorrow, preferably towards the upper end of that range. I think it'd be more than fine. No real issue there. With the Russell 2000 lagging and some of the sectors today lagging behind, I think it'd be totally okay. The short story is we need some kind of news. We need something tomorrow. We need good, positive news. The whole immigration thing that came out today, that's not that interesting to investors. So I think they're going to need to see a little bit more. Or we just finish out the week sort of quietly, close to flat for the week would be okay as well. All right, for the S&P 500 today, you had 4752 week highs today, or 47 new 52-week highs today. And of that included 7 different sectors. So sort of a broad, expanded list of 52-week highs was sort of okay, I guess. We have some issues, though, in terms of the overall sectors. I tweeted this out earlier that healthcare, while it did well today, is lagging. It's only up about 3%, barely 3% for the year. The S&P's up 15%. So healthcare continues to lag. Who are the better performers? Technology. Technology is your best performing sector. Communication services, which is kind of like some technology, a lot of technology in there actually. Also better performing. That's your second best performer. Consumer discretionary continues to be the third. So healthcare just dead last at 3%. I think that's a bit of a problem. All right, let's take a look at some of the charts here. You got semiconductors at the bottom of the list. That should be the focus. Semiconductors. Semiconductors. You need the semiconductors to get the markets to convincingly move higher, and we didn't have that today, down 1.5%. Now, a lot of that's going to have to do with the Huawei ban, people trying to price in the effects of what may happen there. I think there's probably some more downside left with the semiconductors, and when you start putting together how the S&P 500 is made up, you realize very quickly, vulnerable. The S&P 500 is vulnerable here because of kind of what's going on with not only the semiconductors, but banks. Banks weren't amazing, right? I would call them relatively strong during this whole last pullback, but banks really, yeah, sure, they put in a decent day today, but still seem very vulnerable there for me. I don't know, maybe I'm overdoing it, but just my opinion there. United States oil. This is just the oil ETF direct play. We finally started to move out of this choppy range. Remember, we've been talking about the Christmas tree trading in here. Red, green, red, green, red, green. We finally made a little move higher, all because of news, though. It wasn't because of the inventory reports like yesterday. So today's news, and I thought Saudi Arabia had said that they were going to be sort of, how'd they say it, patient or something where they said, we're not going to fight back with Iran because Iran sent a drone over and they essentially bombed 2 of their facilities, but it didn't really do any damage. They're still up and running. Saudi Arabia said initially, okay, we're not going to fight back so hard. I guess they changed their mind overnight because they launched some airstrikes against them. Well, that spiked the price of oil. That's a 3-day move here for oil. By the way, first 3-day win streak of the month for oil, and now at least getting a little bit back above the 200-day moving average. What do we got here? Let's look at consumer staples. New 52-week highs in consumer staples. Very helpful there. You got earnings, really, just some earnings names in there. And as a broad sort of rally, a lot of stocks participated in that category. Home builders, you're going to know, one of the better performers today. The numbers that came out earlier today, we talked about these yesterday, but the numbers that came out, housing starts, came in better than expected. That's good for home builders. Also, KB Homes, KBH is the symbol. They were upgraded today by Deutsche Bank, I believe. Deutsche Bank said these guys have got their pricing figured out, therefore margins should stay nice and fat for them, or at least as fat as they can be for home builders. So, again, a 2% there. That one was helping out that whole sector. All right, stock-wise, there's really only a few stocks that were front and center today. Walmart, this was at one point the second best performer in one of our portfolios here at Jazz, breaking up to these new highs here. They reported earnings beat by 11 cents. That's a good beat for Walmart. Revenue was a touch less than expected, but basically everybody was cool because their same-store sales grew by 3.4%. Looking good there, and they got a lot of good news going for them right now. However, they did say if these tariffs stay in place, unfortunately, customers are going to have to pay more. They're going to raise prices, and so that didn't go over too well. Turned out to be the 7th best performer today for us here at Jazz. Cisco was the best performer, up 6.66%. You don't ever like to see that gain, but hey, we'll take 6.6%. They reported earnings beat by 77 cents. We were expecting only a penny. They got 76 cents in earnings there, so very good there. Going forward, so their guidance going forward for this quarter, they were very, very positive about it, despite the trade war, right? So you got this trade war thing going on. They were very positive about it. Investors were very positive about it. Stock was higher by 6% today. PG&E, if you're out in California, the stock really didn't move a whole lot, but the official report came out that the investigators determined that PG&E's transmission lines were the cause of the Camp Fire last year that killed 85 people. None of that's good. Nobody really cared today. We pretty much already assumed that from a couple months ago. 3M was the worst performer in the Dow, by the way, down another 1.3%. Look at this sell-off here. That's quite a sell-off there. New 52-week lows there. Worst performing Dow stock. Actually, the only other 52-week low was Nordstrom. Other than that was it for 52-week lows today. And that's pretty surprising, right? Because you've got a lot of stocks very close in the retail space. Macy's, Urban is another one there, very close to 52-week lows, but able to hang on, at least for now. After hours here, you got Pinterest. Pins not doing too well after hours. They lost 32 cents. This is their first earnings report, by the way, since launching their IPO. They lost 32 cents. We were only expecting they'd lose about 11 cents, if I remember correctly. 11 cents. Revenue better than expected. Let me see here. Monthly active users. That's going to be a focus. Monthly active users, 291 million. That's an increase of 20%, 21%, somewhere in there. Revenue per active user, 26% higher. That's good. Nice. So that part, good. Pinterest, not too good. Losing 32 cents when we thought they'd only lose 11. That's the problem. These companies are losing money. Zoom's not losing money. Hey, if you like coffee in China, cheap coffee in China, Luckin, the Chinese coffee shop franchise. They got all kinds of locations. The equivalent of a Dunkin' Donuts here, not Starbucks. They're not equivalent to a Starbucks. They're equivalent to a Dunkin' Donuts, only a lot cheaper. They're going to IPO tomorrow. A lot of concerns there as well, but they're going to launch. They should be pricing here today. Maybe they already have, and that's it. So is that all I got for you? Oh, also, I saw on CNBC, they said credit card interest rates hit their highest levels. Well, we track all of that great stuff here. Although credit card interest rates have hit the highest levels, which is, of course, great for MasterCard, American Express, and the like, people are paying it. As of now, people are paying it. So we looked up newly delinquent credit cards, only at 6.71%. It is ticking higher, but is still sitting near historical lows. So even though people are paying higher interest rates, they're still sort of making it happen, which is kind of ridiculous, but they're doing it. Also, people that are late by 90 days or more on their credit cards is only 8.32%, which maybe sounds high, but going back before 2003, that's still sitting near lows, so not all that bad there. We also looked at mortgages, because that keeps coming up. Hey, people are getting more delinquent on their loans. Well, one of the things that we track here is how many people went from being current on their mortgage to late. And then how many people went from being late to being current? What's that transition look like there? I'll probably share this with our customers in our portfolio update class. But the number of mortgages that went from being current to late by 60 days or less is less than 1% and sitting near all-time lows. So really no fear there. The number of people that went from being 30 to 60 days late to current is actually trending higher. It's at almost 40%. So more people are bringing their mortgages back in line than letting them slip slowly and slowly. The real problem, by the way, is autos. That I tweeted that out the other day. Those auto loans are a bit of a problem there. I bet you that starts making some headlines. Anyways, I'll try to take your questions, see if I can help you out in any way, and we'll go from there. NVIDIA did well on earnings, yeah. You guys like the idea of short-term pain in the trade war for a long-term gain. That seems to be the stance, right? And old Mr. Trump, if the markets keep just ticking higher little by little, call it whatever you want, doesn't really force him to give or to bend on what he's thinking he's going to do there. And that's true. Even Democrats are pushing for him on that one. So it's sort of a quiet support, but it's out there. You see the tweets. Yep. Ricardo says, I have a feeling more discounts are to come this summer. That could very well be. We'll see. It could be an active summer. Usually it's pretty quiet, but we'll see. Yep. How about Beyond Meat? Oh, boy. Yeah. Beyond Meat, I think it was new highs today. It was new highs today. 7%. They're getting a lot of this sort of attention because of the issues Impossible Meats are having. Impossible Meats they're not going anywhere. they'll be back sort of, quote, online. I don't know. I don't buy that one. You know, the number of shorts on that one is bigger than any other IPO right now, meaning the people that are betting on it going down cost you about 70% interest a year at this point. 75% interest at one point during the day, meaning sort of a long story, but if you want to bet on the stock going down, you have to borrow shares from somebody. If you borrow shares from somebody, if it's a really in-demand stock, that side can, or the middleman, the brokerage firm, can raise the interest charge between the person you're borrowing from and, of course, you. And so Beyond Meats are sitting at one point up to 75% in interest annualized. Nobody's going to keep it for a year. That just shows you the amount people are willing to pay to bet on this stock going lower. So far, they've been wrong. So the stock obviously is doing really well, almost to $100 there, but it was crazy. That is crazy. Which sector has the better potential in the coming weeks? Well, I can't actually make a prediction or anything like that, but I can say if you like a discounted sector, an underdog, if you will, that's healthcare, 3% on the year. Healthcare itself has a lot of resistance overhead to deal with, but if you like an underdog, it'd be healthcare, it'd be materials, it'd be utilities. Those are near the lower end of the spectrum. If you like the momentum plays and you say, well, I want something that's already done well, which one maybe continues to do well, that'd be consumer discretionary, communication services, and technology is your best performer. So I'll leave it up to you. Everything else is sort of in the middle of the pack there, but that's a good way to look at it. It just depends on what you're trying to achieve there. Yep. Okay, talk about GE. I could talk quite a bit about GE, sure. What would you like to know? So from a pricing perspective, let's go over it. Can you see the charts? Yeah, let's do this. So from a pricing perspective, there's no hurry to be involved in this stock, right? Can we go out a little further? Look what they're doing here. This whole time, what's that? From the beginning of the year until now, there's just nothing there to tell you the stock is worth more than $10. I believe the highest price target an analyst has is $12, but the company's in rebuilding mode. They're turning a massive naval ship from this way to this way, and it's one of these. It's a slow turn. So if you own it and you believe in it, there's no reason for you to take any action, either add more or sell your position. If you're looking to buy it, there's just nothing there yet, in my opinion. And now if that means you miss out on the first 15% as they officially kind of get things going, so be it. You can benefit from the rest of the ride. I don't think there's any reason that you have to be the first person into the mix there. Xilinx dropped a lot today. You're right. I think there's obviously some room to go if you're a technical trader. Seems like $100 would be closer to a support area that people would like there. Yeah. And Applied Materials, I think they reported earnings a little surprised to the upside there for Applied Materials. We'll probably talk about that one tomorrow. Yep. I think aside from that, I have given you all I can give you today. I hope you enjoyed today's show. Don't forget, May 30th. If you like Mr. Josh Scanlon, we're bringing him down. I mean, he's coming down. I'm not like bringing him here. He wants to come here. But we are... we're going to do a show together. So the normal 1 o'clock video, that'll be me and Scott. We're going to take, or Josh, we're going to take questions and try to maybe keep a focused topic, but we'll see what happens there. And then he's going to join me for the 5 o'clock show here, and we'll see what he thinks about the stock market. So that is going to be pretty cool. I think it'll be fun. Anyways, hey, have a great rest of your day. We'll see you later if you're one of our customers, 8 o'clock tonight. If you missed the show or you can't make it to tonight's class, that's cool. Remember, all the classes are recorded and they're archived in the dojo. So if you just go right into the dojo, log in, click on Video Library, and you can actually sort by what you want to see. Basic stuff, geeky stuff. Maybe you need some support help with your account here. You can sort by however you're trying to see things there. Go through and all the videos are there for you, nice and saved and ready to roll when you are, well, back to work for me. Enjoy the rest of your day, and we'll talk to you soon.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.